Right, I'll get into it. I'll just talk through some of the highlights on the performance side, some of the headlines on financial, and then hand over to William to go through some of the detail on the financials, and then do a bit of a wrap up on strategy and market environment and go forward. So the results we've announced today for FY11. I guess the two big things that are important through that is the performance on the retail side. Retail performance across the company held up very well in what was a very competitive market through 2011, and I guess a highlight and a testimony to the work of James and the team was winning the Deloitte Energy Excellence Retail of the Year Award for Mercury Energy. On the generation side, we had a significant increase in production, 17% year on year. And that actually shifts our market share in the generation side by more than 2 points, which is quite a big shift in an industry that doesn't change much year on year. And I guess the headline financial numbers: EBITDAF up 35%, underlying earnings up 16% year on year, and dividends, which I'll talk a little bit more in detail later on. So good, strong financial results, really driven by increase in the generation side and supported by a very good performance in the sales portfolio. So these are the numbers, just running through. Revenue is on there. As most of you will know, that's not a very good indicator for this industry. We tend to focus on things like energy margin, EBITDAF, and through underlying earnings to try and get away from some of the distortions that occur through IFRS and the like. TSR, so total shareholder return, that's obviously we don't have a listed price that we can drive that calculation off, but it's driven off the valuation process that we go through year on year. So a step up in the value of the company, and also obviously the financial performance during the year. On dividend, you can see there the interim and final dividends compared to FY10. There's a couple of things to look at in that. One is that overall dividends are up 28% year on year, but also just the distribution through the year is probably worth looking at. Typically our first half is stronger than our second half. Partly that's high demand through the winter period, which is concentrated July, August. And the other thing to look at, is you can see that our financial performance in the second half of FY10 was relatively weak. So of the 4 halves, if you like, across those 2 years, that was the weakest period. And then we had poor hydro conditions in the second half of the FY10. We did not have that repeat in FY11. So the important thing on there is just overall dividend up, and just giving you a bit of a colour on what the distribution of earnings through the calendar or through the financial year are. So this is trying to give you a bit of a longer term look at what's happening at the EBITDAF line. And I guess the key thing to understand there is that there's been a shift up, virtually a step change that's occurring in EBITDAF. That's a flow-on effect from the investment we've made in geothermal over the last few years. So you're actually starting to see that drive through some of the other things I've already talked about. And the other piece in there, compound EBITDAF growth over 5 years of 7.8%. So healthy growth in EBITDAF compounding over those 5 years. As I said earlier on, geothermal's really been the game changer for the company. And that's really a flow on from a recognition that in this last year we had a $400 million value uplift across the asset base of the company. A good chunk of that coming from the geothermal side, but some of it coming on the hydro side as well. The 2,200 gigawatt hours of base load contribution we now have in the portfolio from geothermal is significant. Just in a context way, the average long run expectation out of the hydro side is just over 4,000 gigawatt hours. So geothermal is now very significant. And here in Auckland we have at Southdown a gas-fired power station which has actually got multiple units, so significant amount of flexibility in that power station at Southdown. And most of you will be familiar with the story that 2009, 2010 we experienced, we achieved significant retail growth ahead of the expansion in the geothermal generation side. And we've managed to maintain the retail portfolio and improve the quality of that over this last year. Ngā Tamariki project that we committed to during the year is, I guess, the last of the big projects we saw out of what we regard as the Tier 1 geothermal sites. The most attractive economic investments we saw for development here in New Zealand that were within our portfolio, and the commitment to that project, which is due for commissioning around mid-2013, will see first contribution to earnings flowing through in the FY14 year. And I'll talk later on a little bit, a bit of an update on the growth we've seen in the offshore geothermal. You will have heard a bit of that story before, and just give you an update on what's happening in the US and in Chile in particular. So looking at some of the numbers on the geothermal slide, on the geothermal side, on this slide, the bottom is in green is the production from geothermal power stations, including our equity interest in the Mokai power station, 25% equity interest. And you can see how that's grown from something under 500 gigawatt hours or so in FY7 through to 2200 odd in the last financial year. On top of that is the hydro. Obviously the hydro production is a function of inflows into the catchment and storage in the catchment. And there's some variation in that through the year, but the absolute minimum that we've seen over 70 odd years or 80 odd years of records is equivalent to about 3,200 gigawatt hours. So if you look at the base of renewable contribution, it's gone from 3,700 through to something in excess of 5,300. So that's the step change in our base contribution from the generation business that's occurred as a result of the Kāorau and Ngāpurua investments in particular. Looking at the year on years, hydro was up 17%. You can see FY10 was a relatively weak year at 3730, down on the 4,000 odd gigawatt hours that we would normally expect on a long run average. Whereas this last year was about the same amount above that average. But the big mover was in geothermal with a 40% increase, dominated by full year contribution from Ngāpurua. You might recall we only had 1 quarter of contribution from that project in the last financial year. We also had better production out of Kāorau as a result of addressing some of the issues we had around injection that have limited some of the capacity at Kāorau in the previous year. And cogeneration, or the gas-fired generation at Southdown, was down about half of the previous year's level. And that's really simply a function of very low wholesale prices, didn't support burning of gas through the gas plant at Southdown. So again, it just shows there's quite a lot of flex. I think in Southdown, if it ran base load, it's 1,400 gigawatt hours. So quite a lot of response to market condition capability that sits within the portfolio. And we really run Southdown when we see market opportunities to make a bob, or secondly to manage the risk of the overall portfolio. So it has two functions, and the flexible gas contracts we have around that are married to achieve those two objectives. This is a slide from the MED. I need to qualify that. And what this is projecting is how the mix of fuels will develop in New Zealand over the next 20 odd years. It is an MED forecast. What it does show is that in the last few years you've seen geothermal displacing coal, and that's largely been through the projects that Mighty River has developed, and I think Huntly had a record low in production last year. So you really are seeing what I would say is the largest single contribution to carbon emission reduction in the electricity system in New Zealand has come from Mighty River's geothermal developments. And then post 2010 you can see The MED is forecasting that geothermal will eat away at not just coal but also at gas production. We'll see how that materialises. But good story from geothermal. Displaced coal as number 3 in the last year, and on these forecasts would become the number 2 fuel in New Zealand by 2030. From our point of view, last year I think our renewables were 96% of the total production, so we're already well ahead of the recently announced, this morning announced energy strategy of, is it 2025 that we're going to hit 90%? All right, EBITDAF bridge. So this is just showing how things have moved year on year. 2 big movers in there. One is the geothermal contribution, so significant volume increase, you can see showing through there. And the other is the sales portfolio. As you'll see later on, we held on to volume, got some better yields in the sales portfolio, and wholesale prices were much lower, were lower in the last year than the year before. So the sales portfolio performed very well in a weak wholesale price environment, which is what you would expect to see. And geothermal contributed well even within a weak wholesale environment. On the hydro and gas side, although our hydro volumes were up, they were almost offset by the weakness of wholesale prices in the year. What's not on that slide, but William will talk about a little bit further on, is we actually had good cost containment right across the business. So year on year there was only a 1.4% increase in operating costs. Bit of detail on the retail side. As I mentioned, 2009 and 2010 were years of significant growth for us in the customer number front and overall sales volumes. 2011 was more a case of holding on to those volumes. Although customer numbers were down by, what's my maths, 20-odd thousand, or 4.9%. If you look at the total FPV line, or look at the residential FPV line, you can see that the volumes we got from the residential market were actually up year on year by 1.5%. Now partly you can see that in the graph, where you can see the South Island contribution is increasing through time, and in general electricity intensity per customer is higher the further south you go. Any of us, Robert, grew up in the far south, we know why that is. It's bloody cold. Having said that, it was a bit colder here this year. Thought I was back home. On the commercial side though, we did lose more than we gained on the residential side, and you will have seen some of the other companies reporting growth in the small commercial area. We conceded volume there rather than concede on price, and overall the FPV volumes were only down 1.7% year on year, so we're pretty comfortable with that. I guess the other thing that's in there, you can see South Island sales are now 14% of the overall portfolio, so we've had quite a flip, quite a mix, and overall quality has improved. Tiny Mighty, which you'll recognise as one of our acquisition brands that has been very successful, along with Mercury, in targeting some new network areas in the South Island as well, and Lower North Island. So very proud to be recognised as the Retailer of the Year award after being a finalist in the previous year, and I think a lot of the reasons for that is good financial performance in the year, holding on to the sales portfolio that we'd built in 2009 and 10, despite the intensity of retail competition, being well rated by Consumers Institute, and also probably particularly the product innovation. We launched and those of you in the banking fraternity will say, why does it take so long? But we're the first retailer to launch a 3-year fixed price product into the residential market with success. I think it's been tried in the past, but no one's had the success we've had of getting 73,000. So over 25% of the residential base committing onto that product, which is very successful in a very short period of time. The other thing that James and the team really focused on is improved debt management. As we went into the GFC, we could see that was a potential risk to the business, and so a lot of pressure went on thinking about how we could get ahead of what could otherwise be a a bubble growing on the debt management side. And we've managed to contain bad debts through a combination of things, improved processes, a lot of work that's gone into that, and also the use of the Glowbug device, which is a prepay technology that we encourage customers to go on to try and help manage their own bills on electricity. Tony might have talked about, I guess in terms of the go forward, there's clearly a lot of pressure on retail margins. It is very competitive. It's not a new thing for Mercury. We've experienced that in the Auckland market in 1999-2000 when mPower was first launched. But it's probably the first time we've seen the level of competition right across the country at that same level of intensity. Just quickly on pricing, I referred earlier on that the wholesale market prices were down. You can see down at a generation level, we were down 14.8% year on year. Our purchase costs out of the market were only down 7.4%. The reason for the difference, on the generation side, two reasons why it was down larger than on the costs on the purchase side. One is we had a lot of hydro volume that we actually had to clear through the market quickly. So we had depressed yields out of the hydro year on year. And obviously geothermal being baseload, we had a larger proportion of baseload generation in the market than we had in FY10. So those two things work against the, if you like, the generation weighted average price that we achieved year on year. Having said that, FY10 was an outlier in that it had a lot more we had a lot more price volatility in the wholesale market. So if you look at the ratio between, if you like, purchase and generation, so the bottom line, it was a 1.05 ratio last year. Normally it would track around 1.03, but that extra hydro flush, if you like, caused that ratio to work to a higher level. 0.97 last year was quite an outlier for us. And with that, I'll hand over to William to go through the details of financials.